Well, thanks for joining us today. I'm Marlon Bowling, your tour guide to the ag commodities. We have new ethanol production numbers that just came out, and we have those numbers for you just to keep tabs on what's going on with the production in the U.S. this past week. Well, we actually increased a little bit. So the production ramped up to 1.09 million barrels per day from 1.035 that it had been the week before. 4-week average is now 1.066 million barrels per day. Ethanol stocks, well, they also increased a little bit. They were up 200,000 barrels to 20.5 million, but there were no imports of ethanol this past week. Well, here's the latest on our futures trade. Let's go to the big board. I'll get you updated on prices. Corn had a big rally since about, I'd say about 8:45 or so. It has gone almost straight up. And we have March corn now 3 cents higher at $5.89. Remember when we opened up and were lower on the day? Well, it's turned around now. May is up 2 1/4. In the soybean trade, we had some sharp losses early on, and now you have March soybeans 7 higher at $12.65 1/4. That's 19 cents off of our earlier low of the day. Let's check out our wheat then and see what's going on there. Well, in Chicago, we have March down 10 1/4 at $7.98 1/4. And in the Kansas City market, we now have the March down 14 1/4 at $8.13 1/4. So the bullishness has not spilled over much into the wheat yet. In Minneapolis, you have March wheat now a penny 1/4 higher at 10.37 3/4. Let's bring in Todd Bubba Horowitz of BubbaTrading.com. He's based in Chicago, and he joins us right now. A little bit of enthusiasm here in the last 30 minutes of trade or so here, Todd. Have you heard it on the wire what that's about?
You know, Marlon, I think we're just really stuck in, pretty much of a range right here, and we're kind of swinging back and forth. It's kind of the same in the equity markets. We're coming to that time of year. The year is winding down. There's not a lot of reasons to push anything back and forth. And I think we'll see this continued churn. I think if you look at it from the good side, soybeans over $12.50 solid, corn over $5.70, wheat's a little bit weak below $8. So, overall though, we really haven't gone anywhere fast in the last few days, although we've had some big swings. But at the end, when you look at it, it's just right where we started, basically.
Is it normal for the trade to kind of go sideways, if you will, ahead of a December supply and demand report that'll be out tomorrow?
And not really. I mean, I think the price action is light and low under any circumstances, and I think that's this time. That's consistent with this time of year. And I think this time of year, unless we get something to drive these markets and give them a good solid reason to move one way or the other, I think they'll continue to. I think they'll work their way slightly higher, but I think they're going to be very slow and tepid waiting to do so.
Any suggestion as to why the wheat market is dragging its feet in relation to the corn and beans today?
Well, yeah, wheat had such a big move, Marlon. Wheat has been the leader of the complex for about the last 6 weeks. So, if you go back and look at how far it spiked up, it has to have some retracing back to the mean, which is right about where we are now. So if it's going to continue the solid uptrend, then it would continue up from right here and continue to move higher. If not, if it's going to reverse out and start to, downtrend, then it'll go down from here. But the big move up earlier is the perfect understanding why it has not been as strong, because it was much, much stronger long before beans and corn got started.
That's very true. Well, thanks for pointing that out. Todd, we'll talk with you again real soon. Todd Bubba Horowitz of BubbaTrading.com. He's based in Chicago. We'll return. We'll get you updated on livestock trade next.